behind the returns and evaluating real estate funds. And the reason I did this is because the most common investment I've seen is people investing in some sort of real estate fund or a real estate syndication. So I kind of want to explain why I like to teach this class. And if you look at me as an individual previously, right? I worked for a large retirement company. I oversaw the sales and the marketing team. But I ended up branching off and I started my own financial institution, which I successfully sold. Since then, my wife and I have kind of been retired, and now I don't really have to do anything, which is amazing at my age. It really is. So we have been very, very blessed, very, very fortunate. Okay. But while working at a retirement institution and running my own, I saw on average 25,000 investments a year that would come right across our desk. And thousands upon thousands of them were bad, fraudulent, clients that lost all their money. Several of them are good. So I have so many great, good case stories, right, where someone made a bunch of money. But that's not what we're talking about today. We're going to talk about how you can make sure that before you invest in one of those syndications, one of those funds or something like that, you know what you're getting into. Because a lot of times you're investing in them because of the person, not because you actually understand what you're doing. So what we're going to learn, what actually is a fund? What is it, right? How does the risk in a fund actually work? Like what makes it go good, bad, etc. The roles of what I'm going to label as the operators, the sponsors, the managers, even you as the investor, the limited partner in some cases, understanding fees. Many times you didn't even know there was fees and you had no idea. Right? When does a fund make sense to do, like if I'm an investor, to raise capital? And when does it make sense to invest or not invest? Who are these investment funds for? So we're going to tackle each one of these questions. And get this, we're going to go to the actual SEC website and look up legitimate funds. So if you guys have a fund you want me to review for you, get it ready. We can review it live right now and we can go through all the goods and all the bads. Right? That's what I'm here for. So let's define what is a fund, right? It's typically when someone's going to apply at an SEC level to raise capital for an investment, right? Now, when I say raise capital, that means they're going to go to investors and say, I want money for oil and gas, for real estate. This could be single family homes. This could be commercial. This could be to start a small business. I went to raise capital for my small business when I had to start a financial institution. So I have a link down here for a good resource. You just go to sec.gov and that person should be applying at that level. Okay. Now, this won't always happen. We'll talk about times where it does and it doesn't. But for most of the people that you see, they're going to have either minimums or, things for you to do, or you have to be accredited in some cases, right? Bam, they should have it applied at the SEC level. So we're going to go ahead and check out that site in just a little bit. So the most common fund I see is a real estate fund. Why? Because it's actually the most common investment that multimillionaires and billionaires hold is real estate, right? So this is going to be the most common fund that we're going to see across the industry. So if I'm seeing a real estate fund, I got to understand a little bit about real estate being single family homes and commercial. Single families is usually valued by an individual appraisal, right? Someone goes in and says, well, this house is worth 200 grand. So the house next door is worth 200 grand. Maybe 210 because it has an extra bathroom. Whereas commercial properties are valued drastically different. Commercial properties are valued by the amount of income that they're actually producing. That's it. So I could have two identical commercial buildings side by side, and one could be valued higher strictly because it's producing more income. Now, if I'm going to create a commercial fund, a syndication, storage unit, senior living facilities, you name it, I want to make sure that the value that they're stating me is correct. Because just because the property next door is producing X doesn't mean the new property will produce the same. And that is a common misconception. So, who has a fund? The most common funds you'll first see are lending companies, especially hard money lending companies. This is very popular. I actually see Rick Bressler on here. Rick Bressler's a great friend of mine, right? Now, I don't think he has a fund, but what he does is he has his own lending company out of Texas. Now, as he lends money, right, it's not just his money he's lending, but he gets money from investors and he makes a spread. That's very, very normal, right? So it's a good, safe investment for a lot of investors out there. So it's very common. I promise you, whatever hard money lending company you have in your local area, right, they have a fund of some type. They are selling their loans. This is very, very normal. Now, I'm going to label this as development funds. This is another one. This is when someone is developing a neighborhood for single-family homes, developing multifamily or apartment complexes, rehabbing a storage unit to make it better, maybe creating some senior living facilities, commercial properties, you name it. Development style funds, or also known as syndications, are very, very popular. And then we have investors. These are going to be a lot less popular. You're not going to find them as often. This would be like me as an individual when I said, hey, I need to find an investor that is willing to help me start my own business, my own company, right? That's going to fall under the investment category. But we got one more: fraudulent and schemes. And we're going to look at some of these coming up in just a minute. Believe it or not, about 16 to 17% of all investment funds are fraudulent. 16 to 17%. That's insane if you think about it. So let's figure out how we can ensure that we're not stuck in one of those schemes. Okay. So I like to always talk about, how does the fund make money? All right. Does anyone have a guess? How do they make money? Well, I got some questions. Some funds I'm invested in: Peachtree Group, BH3, Hearthfire, Domain Real Estate. Ooh, Bob, we can go ahead and look up some of these if you feel comfortable with me looking them up. Are you familiar with life settlement product funds? I am not, but we can once again look this up as well. So we're going to look at some of those. I like those. Good. Keep them coming, guys. So let's figure out, how does a fund make some money, right? If a fund has a high ROI, I'll need you to understand that is a higher risk. And a lot of times people, when they're looking across funds, well, fund A is paying me 12% and fund B is paying me 10%. I'm going to go with the 12% one because I make more money. Guys, that is the worst way to go about it. So let's stick with the lenders. It's the most common that we see, right? Lenders are typically going to have a much lower risk, right? On average, what they're doing is they're lending money out at a 10 to 12% interest rate. They're going to pay you a 7 to 8% for being an investor. They're making the spread. All right? Think about it. You as an individual right now, you went to borrow money from a hard money lender, a big lender, a bank, something like that. What is the interest rate you're going to pay? Right? It's not going to be 7 or 8. It's going to be a little bit higher. So knowing that, if you're in a fund right now and they're able to pay you 12%, how risky are they being with your money? What are they doing with your money for them to pay you 12% and still make enough money to cover everything else? Think about that. They're charging someone 15 to 20%. It doesn't make sense. So this is risk factor number one, okay? We want to be careful of the developer ones, right? Now, normally, if we're looking at developers, they're not going to be able to make monthly or annual payments. And they should be trying to hit around a 10% ROI. If you're going to get higher, a 20, 25%, not that it's not possible. It is absolutely possible when it comes to developers. But the higher they're telling you that ROI is, the more risk of things like capital calls and total loss of funds, right? They're hedging your bets. So how do you get paid, right? If I invest in your fund right now, you have something, you're raising capital. I want to know, how do I get paid? Click next. There it goes. So if the lender sells the loans, they're collecting payments from the borrower, they're making a spread, you get the remaining balance. Developers, if we're looking at one of those syndications, a storage unit, a senior living facility, something like that, right? They might actually raise extra capital. This is very common. I'll see they need $8 million for their project. They raise $10 million. The other $2 million is to pay investors to keep them happy, right? Will they get the project up and running? That is so, so common. It really is. If it's single family homes, they might sell off a property, right? If they sell off one to help pay back investors, I've seen that done as well. They have to give you an annual, what's called fair market value. Lastly is oil and gas. In the oil and gas area, if we're looking at mineral funds, right? That's very popular. It's probably the most common in the gas industry, oil and gas industry. Minerals typically already have income that's producing. They've been producing for 20, 30, 50 years in some cases. Now, it might not be a lot of income, but that income is what the investors will get right away. So it's very common. Okay. Why do people raise capital? I want someone to give me an answer why you think they raise capital. Anyone? Kurt? Why do they raise capital? I see you in here. I see you, Kurt Power. Connie Ridge. Oh, I see a bunch of people I actually recognize.
And I did turn on the chat, so you can use chat, guys, too, if you want to.
Yeah. Let's see. What's funny is people think they raise capital because of that storage unit, because of these other deals out there. Hard to get bank loans, to fund projects. See, the fund projects so they don't have to use their own money. I wish that was the case. It's all for the fees. You guys do not even realize what an average fund's fees are being paid out to the person that's raising the capital. So if we're looking at that, right, many times the fees will outweigh what that person that raised the capital's investment profits by far, right? It really will, especially when you get to some of those large funds, those 50 million, 75 million, $100 million funds. Those fees are out of this world. It's just nuts, okay? So the average fee will be in between 5% as high as 15% of what the capital is that they're raising. And I'm going to show you that right on the SEC website here in a minute, okay? So I want you to think right now, you heard someone say, well, I have a $10 million fund. Well, what's their fee? If it's 5%, that's $500,000 that they pay to themselves just to raise the capital from your own money, and you agree to it the minute you do that investment. It's scary. So it's the fees. Big, bold letters. You want to ask this question. Hey, if you're raising capital, I get it. You have to charge or pay something. So let's look at an example, right? Someone has a $10 million fund, right? You look through the operating agreement and it says that the manager's fee will be 8% of all capital raised. That's an $800,000. Boop, they get to pay to themselves, whether the investment is successful or not. Haven't you ever wondered why you'll see people, they raise money into a fund. As they go to raise money into a fund, they look at it. Oh, the fund didn't do too well. No worries. We're just going to start another fund to help fix this one as well, right? Or yeah, that one didn't do great, but that's okay. We got another one. We're going to do better this time. They're just making the money on the fees. Imagine that. Every time they raise that capital. And I've seen as high as 20%, but that's very rare. I've only seen that in 2 cases. But I have seen 15%. That's $1.5 million they get to pay to themselves. So remember that, guys. Other ways they can collect money and fees, right? A finder's fee for the deal. Sometimes they'll have finder's fee. This is very common, right? Think of it like a wholesaler if you're in the single family market, right? Many times that's 1%, right? Is, hey, if I bring an investor to you, if you invest 100 grand and I brought you there, I get 1% of that. That's $1,000 in my pocket. Very common. You know, manager's fees for running the fund. Average salary, about 250 grand a year. Now, that's a good size salary for someone running a fund. I'm going to let you know, it takes a lot more work than you guys ever realize. Dealing with the SEC, the IRS, attorneys, investors, and everything else, I think that's actually a little low, but that is still part of that money that you're investing, okay? GP fees is a partner in the deal. So sometimes a general partner, if it's a syndication, you're listed as a limited partner, an LP, where GPs will have their own fees, and we'll look at some of those as well in just a second. And then you'll have miscellaneous fees sometimes paid out. This is very common in oil and gas, right? If you look at any of the oil and gas stuff, you'll see that a lot of times oil and gas will have Class A shares, And what you're investing in is Class B shares. You're not privileged to the Class A shares and what Class A gets paid out, right? So if you look through it, it says, oh no, our manager's not collecting any fees. And don't worry, I'm invested in the fund as well. I'm invested though under the Class A shares, meaning they don't have to disclose to you, and they structure it that way. So they don't have to disclose to you what they get paid. This is very common. If you ever can get Class A shares, do it. Class B and Class C is the most common though you'll see, especially in the oil and gas space. It is almost impossible to get Class A shares. So what secures your fund? Anyone want to take a guess? So they don't have to use your money. I like it. Give it a second. Let's see. Q&A. Derek, do you have any deals that can accept a 1031 exchange? I do, yeah. I know plenty of deals that can accept a 1031. Give me a minute and we'll talk about those. All right. What secures your fund? Nothing. Absolutely nothing. I don't care what fund it is that you looked at. You can send me and we'll look at them. There is nothing that secures your fund. When you ask the person, oh, they told me it's secured. No, you want to be very specific with your verbiage and listen to what they said. They'll use terms like this. No, the fund is backed by blank. Huh. The fund is backed by, okay, so that's how my money's secured. Yeah. Why not? Sure. Oh. Right? We have a first lien position on all these properties. So even though you put your money in our fund, if something goes bad, we foreclose on the house and we deal with it, and then we can pay you off. Well, recently we've seen this happen. And even though this is all true, it doesn't necessarily mean my money is secure in your fund. It doesn't prevent things like fraudulent stuff. It doesn't prevent things from just someone stealing the money. It doesn't prevent a lot of other processes. So I'll see things all the time like we have X percentage of single family homes and X percentage of commercial properties. This way they outweigh each other because we have good diversification. That helps keep the money secured. That doesn't mean that your money's secured. Nothing physically keeps that money secured. Okay? I can't stress that enough. Even when the fund is backed by and the fund manager is doing everything right and they're trying to do everything perfect, things can still happen and your money is still 100% at risk. Okay? And we're going to look at some of those. So our fund's bad. I'm making them sound terrible. No. As a matter of fact, investing in a real estate fund, a syndication, is probably the best way to be passive. It really is. If you want to be passive, you have a good paying job. You are a doctor, an attorney, a CPA, maybe you just have a high paying engineering job, something like that. You have extra money on the side. Funds are great. They really are. I'm making them sound bad only because you don't know how to do the right due diligence. That's it. This is a great way to be an investor. You can make so much money if you're investing with the right people. So what questions do we ask? And let's figure out how can we do the right research, right? The first question, is this registered with the SEC? Yes, no. Simple, very easy. I don't care. I just want to know. Sometimes they won't be. That's not a problem, right? But if it's not registered, I want to know why, right? And there's certain times where it won't be registered, okay? What are your fees? There's nothing wrong with that person charging you a fee, right? Even if you didn't know it was there, right? It wasn't charged to you directly. It was charged to the fund. You know, there's nothing wrong with someone charging fees, but I want to know what they are, because if I see something like a 10% fee and it's a $10 million fund, that means the first $1 million goes to the manager. That means that the fund has to make a minimum of 10% just to break even, right? What are they promising me for an ROI? 10%, that means it has to make 20% just to pay me a 10% rate of return. We get scared, okay? Are they paying too high of an ROI? If they're paying 12%, I need you to ask why. Why are you able to pay so much, right? Just ask, right? I'm not saying it's not possible. I see plenty of funds able to do it. All right. I see plenty of groups that can get away with that. However, Most of the time, they're being extra risky, right? Do you understand the asset class? It's funny. You know how many people I see invest in oil and gas? They have no clue what they've invested in. They have no idea. Real estate's a little bit easier to understand because we live and operate in real estate, right? I live in a single family home. I rent a house. I get it because I took a loan out from a bank, right? So kind of makes sense to us. So when we talk oil and gas, right? If I talk about the difference between you making money on mineral rights versus making money on drilling, people don't know the difference, you know? So we like to make sure you really understand the asset class you're investing in. And do you trust the person running the fund? I was just talking to Kendall a little bit ago. I gave a speech on a stage about 3 or 4 years ago. And I got up there because every single person prior to me was speaking. And as they were speaking, they were saying, oh, you know, the best place to invest right now is multifamily. And then you go to their booth and it's because they raise capital for multifamily. The next person says, the best place to invest right now is senior living. You go to their booth and it's, well, they're raising capital for senior living. And I realized that when I went up there, I changed my speech and I said, guys, every person up here wants you to invest in. This includes me. At the time, I was raising capital for oil and gas. And I said, I paid money to be on this stage. So if I paid to be up here, that is not your due diligence. Just because someone's giving a speech, right, doesn't mean that's the best person to invest with, okay? So be careful when you go around there. Make sure you can trust the person running the fund. Now, where did all my knowledge come from? Self-directed IRAs. I promise you, right? And there's some of my clients in this chat. There's some old colleagues of mine in this chat, right? There is no one you have ever talked to, right, that knows more about self-directed IRAs than myself. There's probably about 3 people in the world that I would communicate with that maybe if I had questions, and get this, they do the same thing to me, right? One of them's a guy named John Heyer. One of them's a guy named John Paul Ruiz, or JP, right? JP is actually the one that helped write the IRS revenue code. So I think it's fair that I get to turn to him for questions. Outside of that, I've trained CPAs, tax attorneys. I've worked with almost every self-directed IRA institution out there. I even started my own and sold it successfully. During that time, so many of my clients would do investments, and legally, even if I knew the investment was bad, I can't say anything. All I can do is sit back and watch. So what we'd do is we'd prep and ready, and we would wait for that investment to go bad. And the second it did, and the client came knocking, we said, here's this attorney, here's the SEC rules, here's this, here's this, here's this. And we give it all right to the client the second the client came to us. Unfortunately, if you call your IRA custodian right now, they can't help you. Not until it's too late. So let's prevent that from happening, okay? So let's finally get down to it. All right, this is not the most exciting class, but we're actually going to go to the SEC website, and we're going to go ahead and look at some real funds, okay? So what I did is I pre-pulled them up. Let's see if this works. Boop, boop. Alt-tab. Maybe. Boop, boop. We're going to start with this one. Perfect. So if we go to the SEC website, right? And this is just sec.gov. This is nothing special. Wait, can everyone still see my screen? Just realize.
Yeah, it looks good. Yeah, I can see it.
Okay, perfect. So if we go to the SEC website, right? So we're on here. I'm just going to go ahead and look up a fund, right? And I'm going to type up one right here. Tempo Growth Fund, right? Notice I have fund 2. We're going to look at that for a second. Tempo Growth Fund. Now, if we look at this, the first thing that strikes me is for some reason, they keep making amendments every single year to their own fund. Would anyone like to take a guess why? They're changing the rules to it. That's very scary. Eventually, this fund right here failed miserably. One of the reasons it failed, and if we go ahead and just open it up, and this is all right on the SEC website, right? You can go through and you can look at everything on this, right? But the fee that the person that was running it, they were charging was 15%. Well, once the fund went bad, you know what they did? Because they didn't do anything illegal, they disclosed all of this information. They said, well, you know what? I'm just going to do a Tempo Growth Fund 2. we got the same amendments coming up in play for a completely different Temple Growth Fund. Once again, they gave themselves a 12% commission on this one. For every dollar raised, they got 12% of it. So if you invest $1 million, they got 120 grand. In total, they raised about $33 million. And man, they were feeling pretty good. So I think that's very unique. Make sure we're using the SEC website. Let's look at some other ones. So here's one, Ellen Capital Real Estate Investment Trust, LLC. So this fund, what I'm going to do, so we're just going to do the Control F, and we're just going to go ahead and look up fees, right? An engagement fee to be determined. So they have not decided what the commission is yet for anything. They're going to determine it later. What do you guys think? Okay. Interesting. Let's keep going. Okay. Let's see. The company audit committee, fees. As compensation for serving on the company board, all right, the director of each company, 3 independent directors, will receive an annual fee of $1,500 per meeting. How many times do they meet a week, you think? That might worry me. However, let's keep reading. Not to exceed $25,000 a year. I like that because this prevents them from wanting to do frivolous meetings, whereas you can notice how sometimes something like this right here can be a little, Now let's look right above it though. What do we see? What is the annual cash compensation for each board of director? To be determined. They would give you an operating agreement like this, and you wouldn't even know what the people are getting paid yet. You see how scary that is? Let's look at a really bad one, okay? This one is completely different. This is one that actually went to trial. This gentleman right here, Kenneth Matson, right, from KS Matson Partners LP, was raising capital from 2007 to 2024. He spoke at multiple real estate expos, conferences, spoke on any stage, any webinar that you can think of. I promise you, you've probably seen this gentleman speak. Between those years, he raised roughly $400 million. And guess what? It was all a Ponzi scheme. As he raised money, he would use that money to pay off his other investors. And he just kept doing that, and it snowballed. And he ended up pocketing roughly $35 million. This whole case, which you can read about right here on the SEC website, right? This is unique because no one thought this person was doing anything wrong. They thought he was the best. He was at the top of the class because he was always on stage. He was at the front of the room. He was the guy that people looked up to. I've been this guy before where either I'm looking up to someone or people have looked up to me. Don't do that. We can pay to be on a stage. We can pay to go up in front of someplace, right? I can run an ad and have you look at me and find me. So be very careful. I want to bring up a good one too. So this is one that I'm going to try to cut out some of the information just because we want to go through. We're going to do the same thing. I'm going to type in fees. Okay. So mitigation fee, shared application fee for loans, fee, underwriting fee, extension fees. Where is nature of investment and early repayment? Fund expenses. I think this is where it is. Okay. Company expenses include organizational costs, legal fees, accounting fees, blah, 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 blah. All such expenses are borne by the company. The manager may be reimbursed for any of these fees that the manager has to pay for out of pocket, is what it's saying. Okay, that makes sense. Because sometimes they might have to cover something. All right, so what else do we have, though, as far as for the manager, the person running the fund? How much does this person get paid? Okay. The manager and its principals may purchase notes at the same term levels, meaning, remember when I was talking about earlier about the Class A shares in oil and gas, right? That you don't get, but Class B is available? No, the managers get the same right that you do as an investor. So they can't take an extra earnings to themselves. Manager compensation. As the manager company, the manager does not receive a fixed management fee unless otherwise disclosed. Unless they physically tell you about it, the manager that is running this so-called fund, okay, they do not get paid a management fee. I think that's unique. There's plenty of funds out there like that, okay, that can go through. And I want to stress that because unfortunately, we don't look at those. We don't. Or people don't think about that. So hold on. Go back to sharing my screen on a different one. You guys saw everything, right, Kendall, that I was going through, like on the SEC site?
Yeah, fascinating. Absolutely love that. Thank you. Right to the source. Love that.
Yeah, how do I do this? There we go. Boop, boop. Back to that. So
Yeah,
I want to
go.
make a special offer to everyone out there, and then we're going to look at like Robert's questions and Michael's questions, Bob's questions. I see those out there, right? I'm willing to look through on the SEC website with you as an individual. I'll give you a very high-level review of any real estate fund or offering that you may be looking at no cost. If I know you either have attended one of the summits or if you're going to attend the summit, either or, all right? So if you would like me to sit down with you on an individual level, what I'm going to do is I'm going to have my moderator go ahead and just post right now in the chat box my personal and private calendar link, okay? Once my spots are filled up, they're filled up, okay? So please schedule something, right? Here it is right here. Now, while that's going on, let's go and get to some of these questions. Bob wrote, some funds I've invested in is, we're going to do this Peachtree Group. So let's go ahead and look at it, okay? Is that okay if you, Bob? Let me ask that first. Could you just type that in there? Just give me a, is that okay? Thumbs up, thumbs down, chat box, something. Yep, Bob says that's perfect. Okay, so what we're going to do, boop, boop. I'm going to go right back to our SEC website. Peachtree Group. Peachtree Partners. I don't think any of those are it. Hold on.
Yeah, so by the way, you're not sharing screen, just so you know, either way, if you want to or not.
Oh, I absolutely want to. Thank you.
Sure.
Because I want people to see how to do this. All right. So, all right, SEC.gov, right? So we're going to go right down here. Peachtree Group, because that's what Bob listed. So let's see. I don't have any matchings under this aspect. Now, if you're looking, Bob, I want you to look right there at your, they should give you an operating agreement, right? And that operating agreement should have the full name. It could be Peachtree 1, Peachtree 2. It could be something specific. Let's try some of these other ones you have in here. So, we'll say ARD, Ardent. Okay. 8K current report, quarterly reports. Ardent Healthcare Inc. Is that the one? Is there a central place to look up good funds to invest in? Unfortunately not, Fatima. This is why I like to sit down with people on an individual level. You're once again welcome to schedule a consultation with me. My moderator just put that stuff up in there. There is not a good place to look up what I'm going to label as good funds. This is because that's relatively subjective, right? I can tell you this fund is good, but I want you to ask yourself, why am I telling you it's good? Do I get paid, right? Rick Bressler on here has notes for sale. I know that, but they go quick. I work with several other groups that I enjoy working with, but I want you to understand that, like, as I work with them, I don't get paid from groups like that, right? I can tell you a big list of people I've worked with or invested with that I truly enjoy, but that would just be on a private basis. I don't try not to do that too live. So feel free to schedule a consultation with me if you want to do that privately, okay? DLP. Oh, I know DLP. You're not going to like that one. So, DLP, even though I don't believe they're too in trouble yet, let's see. I know DLP really well, and that's usually not good. Dolphin Entertainment Inc. It is not Dolphin Entertainment Inc. DOP is a note fund. You'll see them at a PIMD con out there, and a couple other ones. Be very careful. They're trying their best to get out from underneath some things. So that's really it. What else? Are you familiar with life settlement product funds? Robert, we can look it over. I would love to look all of these up with each of you guys on an individual basis. Like I said, schedule a free 30-minute consultation with me. And actually, my moderator, because I am fishing in the morning, could you block off my calendar in the morning so I can make sure I get to go fishing? I forgot to do that. So, see?
Send us pictures if you catch some good fish, Derek.
Oh, man. I love fishing is my game. It really is. So,
hey, curious. So, okay, let's say you're looking for an investment, Derek, and I think a lot of all the questions are like Matson. You mentioned Matson. So, if you do find their fund listed on the SEC, hey, well, they're listed on the SEC. That must mean it's a good investment because they're registered, right? So good to go, safe, right?
Nope. Not necessarily, okay? The reason I like to first look them up on the SEC is by looking things up, what happens is it gives me some validation. It lets me know that they're at least taking the right steps, that there is a government official that had to review these documents and approve them. That does not mean they're approving for a good investment, a bad investment, or anything else, all right? So that's the first thing that we like to look at. Next, I like to look through the operating agreement, right? Now, when I look through the operating agreement, I'm going to look for fees, and I'm going to look for things like security, and I'm going to look for things that say terms, loans, and you'll see as we go through it that each one is different. There is no two operating agreements that are the same. The problem is when someone hands it to you, Kendall, it's 90 pages.
Yeah.
I'm not going to sit here and read a 90-page legal book. I'm going to blow my brains out. Yeah. So you've got to know how to sift through the bowl, right, and figure out what makes sense to you. What are you really looking for? And I've gotten good at it. I can sift through any one of them in about 2 or 3 minutes and be like, yep, nope, yep, nope, yep. Next.
Wow.
But that's because we've had to do it so often, and it's not good that we've had to do it that often.
Yeah.
So
interesting.
How does one find Michael Jordan of real estate fund managers? So Michael Jordan, this is sad. It's not the Michael Jordan from the Chicago Bulls, right? But he ran a fund, and the FBI, he was on the FBI's most wanted list in 2025 for stealing a pretty good size of money. So that was a big Ponzi scheme. So that's a good question, Michael. I don't know. I'm sure if you found out, there'd probably be about a list of 100 other investors right in line with you to help you find them.
Yeah.
So are real estate investment trust REITs similar or overlapping with real estate fund investments? They're similar, but they're not the same in the aspect of what you're investing in. When I invest into a real estate fund with a bank, right, a local hard money lender, they're usually going to be tied to single family homes. And if something happened, you can break open their books and trace each loan to an individual property. Same thing if we talk about commercial. Well, I'm raising money for a storage unit. Show me that storage unit. Well, it's on this street. It's this corner. Here's the address. When we invest into a REIT, usually what it is a REIT is typically buying up on average 300 to 1,000 loans and or properties at a time, and you will never be privileged to that information, ever. Okay? So REITs are actually a lot safer, but REITs do pay a lot smaller interest rates, 4 to 6%, and most of the time they'll lock up your money. So I like to look up for things like, because on REITs, they'll lock up my money for 5, 8, 10 years. What I try to do is I like the funds that will pay me either monthly, or if they're not, I'll take compounding ones if I know they give me the option to take the monthly payment, right? And I like 1-year terms, 2-year terms, and 3-year terms. If I can get something in there, I feel comfortable because I'm getting a monthly payment and I can easily cash out. So I don't like REITs, but REITs are fairly safe in most cases. So good question. Hold on, I'm just looking through some of these other ones.
Yeah, you got Michael asked. He was asking about the Michael Jordan of fund managers. So of course, you're talking about the best of the best of the best. fund managers. I got you. So yeah, how do you find the best fund managers?
Yeah. Derek, do you have any deals that accept 1031 money? Yes, I do. Schedule a consultation with me, Michael, and I can walk you through some of those. Sometimes it's mineral rights. Sometimes there's actually some good funds out there that will accept them. Just you want to do your due diligence because sometimes they don't exchange as quick as you think they do. S Street, Milwaukee, Wisconsin. I don't know what that is for. Maybe that's a fund they want me to look up. Can you go over fund or fund of funds? Okay, yeah. So a fund of funds is I have a couple of friends that do this. They're very successful with it. I've never been able to invest in one because it's too diverse for me. What it is hey, I'm going to raise $10 million in my fund. With my $10 million, I'm going to invest in Fund A, Fund B, Fund C, and Fund D, right? They're going to put $2 million in our example in every one of these funds and hope that they make a much larger rate of return. And they tell you it's a lot safer. They take typically most fund of funds will take a small management fee. And that's really what's going on behind the scenes. I don't like it because once again, when you invest into a fund, you already have no control. Well, now I'm investing into a fund of funds. I'm 2 levels removed from my control. So maybe I'm too much of a control freak. Maybe that's that military side of me coming out from being in the Army. I don't know. I hope that helps. So, guys, if I can get my moderator one more time to post my calendar link down there. If you want a private one-on-one consultation, please feel free to set it up. I don't work for a company. I don't get anything out of this. This will be 30 minutes to one and done.
Very nice of you.
Yeah. And I want to see all you guys sign up for for any one of the summits. Kendall, if you want to bring up your screen for any of that stuff.
Yeah, I can put it in. I'll put it in the chat. I'll put our link in the chat. It's a free registration for the 3-day Asset Protection Summit. Love to have you. It is free. Zoom's been an incredible tool because now we can make it free. We used to charge $1,000, $3,000, $4,000 for this class. Now it's free. It's unreal.
Wow. There is 76 attendees I can see, and out of the 76 attendees, I had 23 of you schedule a consultation. I'm impressed.
Wow. You're going to be busy. That's really generous of you, Derek. Thank you.
Yeah. Not bad.
Derek, that's really kind of you, honestly. So that's the hardest thing, me personally as an investor, I'm always looking to diversify. We've done minerals and oil and gas and real estate. It's really hard to know. And so having someone like Derek, seriously, super generous. You guys understand, Derek is an expert at self-directed IRAs. And like you said, you've seen thousands of investments from behind the scenes. And so for that experience what to look for very quickly. It's really hard to find someone like Derek.
If you guys ever need help in the self-directed IRA space, let me know. I work with a lot of good institutions. Unfortunately, I work with a lot of bad institutions as well. I get questions from all of them. I really do. I'll gladly figure out which company's best fits your needs and get you an account set up in any one of them. I have contacts at all of them. I really do, from Directed IRA and Madison Trust and Heritage IRA and Equity Trust. And I promise I got a good connection at all of them. So.
Okay, Derek. So if you were to start today, right now, everyone's coming out right now. I think real estate makes sense, but you hear crypto every day. You hear AI every day. If you had your druthers, are you still sticking to real estate these days?
I am, but it's because it's what I know and understand.
Yeah.
Actually, my wife and I had this conversation the other day. She's like, dude, we need to get some AI stocks. I said, great. Which AI company? Because I agree. Hard. AI is going to blow up. But let's go back to the 1980s, right? Do you know how many computer companies there were in the 1980s? It wasn't 2. It wasn't Microsoft and Apple. There's probably over 100 different people trying to develop the right computers. And only 2 of them really successfully took off, right? The other ones didn't get bought out. The other ones didn't just get absorbed. They died, right? Cryptocurrency, we just saw it take a big dive down, so I see a lot of people buying it. Guys, I don't get it. To me, it's just buying stocks. It's the same thing. They go up and down every day, The
Ones and
concept
zeros.
originally, I think, of cryptocurrency is very unique, right? Having a one world currency and stuff. I think that kind of made sense to some degree, but now anyone can make their own coin and their own
Yeah,
cryptocurrency. And it's so I don't know. It's just another stock. It doesn't matter.
I agree
So
with you.
I don't get it. Precious metals.
Thousands.
You
Yeah.
know, I see people all the time make real. My great grandfather, uh, who was the mayor of Watertown, South Dakota, if anyone knows where that's at, right? He made over $1 million in silver,
Wow.
just pretty much hoarding silver. I don't get it though, because as I see it, when it goes up, I'm not making monthly income. I'm not doing anything with it. So I get that question all the time. To me, I'm not saying I can't make money in that, but it's equivalent to me going to Vegas and putting $50 on red. Let me just put it on the roulette table. I might make a lot of money, but I might lose it. Oh,
Yeah, fascinating. Don and I went to a syndicator conference here in Salt Lake City for real estate syndications. And so it was fascinating because we went a couple years in a row and a lot of the syndicators are gone. And so it's really difficult to see them come and go so quickly. And, Derek, you and I talked about this at the start. There is a real estate cycle, guys, and we're kind of in a real estate cycle where fix and flip used to be big. A lot of those things have come and gone, and there's different opportunities. So you've seen a lot of those come and go,
oh yeah.
and especially right now. Any indication on syndication?
Yeah, well, so here's the thing is, and a gentleman by the name of Douglas asked, do I work with new people? Absolutely, right? You don't have to have any level of experience to schedule a consultation with me. All right, that doesn't matter. The next investment's the best investment.
Yeah.
And I used to work for a oil and gas company, and the guy that ran the oil and gas company, actually, I think you guys have some investments with him, right?
Yes.
Smart guy, super smart. Boy, is he a salesman. If you listen to one of his videos, this is the best investment since sliced bread.
Yeah.
Let me tell you why. 6 weeks later, now the investment's gone. Guess what, guys? I got even a better one right here. So here's the thing is people, when they hear these things, it's FOMO. It's that fear of missing out. And a good salesman is great at producing and creating this FOMO aspect. Just because you hear it, I promise you, your next investment will be the best one. Right?
Yeah.
And it's funny because people, they get so scared that they're going to miss out on it. That's the wrong attitude, right? Because no matter what, guys, you can find another one that's paying you that same aspect. You really can. There's another home run right around the corner.
That's a great point. I love that, Derek. Thank you for that. There's a lot of great opportunities out there. And it is true. It is difficult. As an investor myself, over the years, you find good investments. I've seen some really bad investments. And I did not have the background like Derek's had personally, but it's interesting because you want to dabble here and there and get a track record and kind of find out things. And now, yeah.
I've been so spoiled. So if you look at me and my wife's portfolio, we have a lot of very good investments, but it's because I've had the ability to see behind the curtain, right? If you were my client, at one point I had a little over 20-something thousand clients. Well, think about it. You guys do an investment, I can sit back, I see everything. I see all the paperwork, all the books, all the returns. Oh, these ones are doing good. Guess where I'm going to invest my money?
Yep.
And so because of that, I've been very fortunate and I maintain very good contact. That's actually one of the things I've really enjoyed about you guys is back all the way in my Quest days, I was tasked with finding some good, trustworthy people that ran webinars and things, and boom, we connected. So
beautiful. We appreciate it very much. It's definitely a win-win, Derek. We appreciate it. Yeah, no, seriously, guys, this is a big part of what Don and I love to do here at Protect Wealth. It is really building and protecting that wealth, and we really do appreciate Derek and you taking the time to really spend the time. That was very unexpected. So, Derek, thank you for that.
Yeah, no worries.
Don't let it take too much time from your fishing, though.
No, my wife must have heard me all the way downstairs and blocked off my calendar in the morning so I can go fishing. I love fishing.
Good for you.
Yeah.
See, that's what makes you a good investor. It's fishing too. It's the same thing.
It is. It's patience.
It's reeling in the biggest fish. Derek, thank you so much again for your time tonight. Everybody, thank you for being on. And yes, the recording will be available. We will send that out tomorrow to everybody who's registered. And please, yeah, look at Derek's information there. Derek, with your permission, you want me to send that out tomorrow?
Sure,
Are
sure.
you okay with that? Okay.
Absolutely.
I mean, check with your wife. If it's not okay, you let me know because that's very generous of you.
Yeah, no worries. No worries.
Everybody, thank you again so much. We appreciate you being on. Derek, it's always good to see you. Thanks for being on tonight.
You too, Kendall. Don, I know you're there in the background. Hi, Don. Bye, Don.
Thanks again, guys, for being on tonight. Have a great night.